Mark, how you doing, sir?
Good, sir. How are you?
Not bad, it's not bad. Are you in the thick of a one-to-one conference at the moment?
I most certainly am. So I had my first couple meetings this morning, and as soon as we're finished here, I'm going to jump on another one. So.
Wow, fantastic. I don't envy it. So if people haven't been to all these one-to-one conferences, literally where companies can meet people, used to be face-to-face, now it's virtually, and these can be a variety of institutional investors, sometimes retail investors, and 50% of the time people trying to sell you stuff, Mark. That seems to be what I remember.
Yeah, one-to-one tries to do a good job of filtering out those people who are trying to sell you stuff, but a few still squeak through.
They do. Terrible people. Don't know how they live with themselves, Mark. On your dime. Well, look, we haven't got much time because of that. So thanks very much for joining us today. We're going to get a quick roundup of what's happening in the markets, the old golden triangle.
Yeah. So a week later, as we said, everything was pointing to a sideways week, and we got a sideways week. Some of the other metals moved a little higher, with copper and zinc, but it was definitely, we traded within 715 to 720 all week. What's interesting with the triangle is sort of two things moved, but they were offsetting each other. So again, it's about ore availability and prices, NPI from Indonesia, and stainless steel Chinese demand. And so ore inventories, we saw the first real major movement. So we saw a 4% drop in reported inventories last Friday. We'll see what happens this week. Again, 1 point does not a trend make, but we were expecting things to start to decline, and so we'll see what happens. And again, the issue right now is, on the flip side, is that would be great news if demand looked like it was increasing. But during that same week, we've seen stainless steel prices come down a little bit, and so without the sort of the producers in the middle are getting squeezed. So you're seeing stainless production shrink a little bit. You're seeing NPI production shrink a little bit. So as I said, I've said many calls, you need to see those Chinese stainless steel prices or premiums for other nickel products start to move higher. So so we'll see. Fingers crossed. I think it's going to be another sideways week. But again, if we get another 1 or 2 weeks of ore moves like that, then it will be interesting to see sort of how the chain reacts going forward here. So
certainly will. But there's no shortage of demand. That's the thing. So the trends.
No, it's still at a very high level. Yeah.
Yeah. So, but I guess the point is, this is where we are in, this week, next week. But the general trend is we need more nickel and a lot more of it.
Oh, yeah. Yeah, definitely.
Okay. So let's talk about Indonesia, because I wanted to get onto this. I'm just kind of conscious of time here. I haven't got you for very long today. Is there one of your favorite analysts kind of put out a note pointing to kind of big growth of nickel pig iron, right? Yep. Is that going to cause a problem?
Yeah, no, that's the thing is, and so the other part too is there was also a story this week that there's going to be $20 billion of battery projects with CATL and LG Chem out of Korea. So again, encourage people to really always understand numbers in context. So the analyst did a very good job of sort of really highlighting the growth in NPI that's happened, over the last time period, and the growth in stainless steel production. And again, what it did was really affirm, the Indonesia's plan to ban ore and have value-added activities happen in the country has actually happened. So, again, it has attracted, more investment than pretty much any other mining third world or developing world mining jurisdiction in the world. So. The thing, though, he was also highlighting is that, it's up to now 750,000 tons a year of NPI production in the country. And there's likely, we could see another 750,000 tons of nickel. And you say, oh, okay, well, that's 750,000 tons on a 2.5 million ton base. That sounds like a lot. But there's, two things to highlight. One is, again, if you look at longer term demand trends in terms of what we've seen historically from nickel, we need 2.5 million tons more nickel by 2030. So yes, 750 is a lot on a current base, but we still need to find at least another 1.5 million tons of nickel production. And that increase in NPI production is going to start to squeeze out some of the Chinese producers. So again, in that third leg of the triangle, part of the reason why things haven't moved is we are seeing more NPI go to China from Indonesia. And so again, I think that's keeping a lid on things. In the interim, on the battery side, we need lots of pressure acid leach. because that's going to help feed those materials. And again, these $20 billion announcements those announcements were coming from the state mining producer. They have again, look who makes the announcement and kind of how much substance is there behind it. So, they have a track record of making announcements that don't always come to fruition. And one of the companies, was, refused to comment on the story. So, which suggested there probably wasn't much meat behind it. So, again, it's important to pay attention to big numbers, but before you react, think about, what they are in context going forward.
Okay, so P&TAM, track record of overstating. Let's put it that way.
Yes.
Right.
Yes, they've got a number of joint ventures and new projects, that haven't come to fruition over time. So
that's the trouble with state companies. Politicians get involved, and I think statements get made which are political in origin.
Yeah, because what was going on that was substantive is that there was also stories of the Indonesian president going to meet with Tesla and some of the other battery suppliers in terms of trying to promote Indonesia as a place to make battery products. And again, I've said before, the thing with making battery products is you need, it's the right thing to do to take a nickel feed, dissolve it once, keep it in solution until you get to a final product of some part that's valuable enough to then ship somewhere. So Tesla made that point on their battery day. I've been making that point for about a year and a half now based on my conversations with players in the industry. So again, I expect to see, and it would make sense to see, battery precursor plants built in Indonesia to take advantage of the nickel resources that are there. That would be the best thing for the entire, Chinese-based auto chain. Again, not sure that's the best way for Europe and North American battery makers. Again, Tesla in their battery day presentation talked about local supply chains. So, so we'll see how they end up getting involved. They have a Chinese plant and will be making batteries in China. So, I'm sure they'll take some feed again, assuming they can get, environmentally friendly enough feed out of those plants, and that is still an open question to see.
Well, it's definitely an open question because I know Europe this week has kind of moved on carbon tax, which we talked about a little bit in the last couple of weeks as well. So I thought that was interesting.
Yeah, I know that carbon tax, like that is going to be a real game changer, particularly for projects like we have with Canada Nickel. What the European Union wants to do is ensure that, in terms of reducing their carbon footprint, they just don't shove all that carbon offshore and have it come back being embedded in other products and have it imported into the country. So, the most obvious targets are things like in the steel industry, where most of European production of steel and stainless steel uses a lot of recycled material, which is obviously a lower carbon footprint versus, Chinese or other, steel that uses all primary product and has a much bigger carbon footprint. So, given stainless steel is very close to regular steel, and then, nickel is in the alloy space around those, elements, I think nickel will be one of those elements that will very quickly, the EU is going to put a price on it that'll be reflected in a tax. And so that premium, that gap in that tax will be available to low carbon producers if they're able to, have a meaningful gap versus those other products.
It's kind of interesting, actually. I've been listening to it, which is good, isn't it? I've been listening. That's what a great thing to say. Is how you interpret announcements, right? Like a P&TAM making that announcement doesn't necessarily mean that's going to happen, right? History tells us that, right? But if I look at some of the company announcements, and we've looked at a few over the past few weeks and months, we talked about Blackstone, a few weeks ago. I noticed it was Estrella. They're the guys we talked about them a bit last week. I think they talked about a extremely high grade for about, what was it? Was it 0.7 of a centimeter, or was it
7? No, it was 7. It was 7.
7 centimeters, right? Okay.
But again, the key, yeah. So there, the key thing is, again, a high grade intersection in nickel is a relatively rare commodity. So if you see one, pay attention. And they announced a trading halt last night. So obviously, there's going to be some follow up drilling to that. And again, I think the things to watch for, in terms of that announcement is, again, once you get an interesting high grade sniff is, okay, how far away are they going to try and extend it? Because the further they go, the more confident they are in terms of how big it potentially could be. And the second piece, obviously, is how much wider is that intersection? Is it start to get to a mineable width? If you're going to mine something underground, it has to be, you're taking something that's generally 2 to 3 meters wide. And so, if it's a small portion of that, you're going to, the grade of that material is going to be diluted in that process. So again, we need more nickel sulfide discoveries, big time. And again, it's very rare to get any kind of a multi-percent intersection. So, those are the things: step out distance and thickness, and then where it's relative to the, they've provided a good sort of footprint in terms of what they think that the size of the target is. So it'll be interesting to see what's going on. So my fingers are crossed for them that they get a nice hit.
Yeah, hope so. See, just quick, I think we've got time. Trading halts, right? They usually signify a significant announcement, and the market, the exchange doesn't want anyone to get an unfair advantage, right? What are the most bizarre cases of trading halts that you've heard of?
Oh, geez.
I know we caused one by mistake.
Oh, did you?
Oh, yeah,
okay.
Totally.
What happened?
I think we put out an interview before we should have.
Ah, yes.
Yeah. We got an exclusive. We were wall crossed, and then unfortunately, let's call it a technical error. By that I mean human, who put it out slightly before it should have gone out, and that caused us. So there's nothing untoward there. It was just a genuine mistake. But it's quite a funny thing when it does happen, and it happens for all sorts of reasons.
I can't think of anything offhand, but let me. I am sure there's a few doozies out there. So
there's got to be. There's got to be. There's got to be. Yeah, there's been no material change to business. Harking back a bit there. Chalice did something. They've been acquiring a bit of land recently. So why would they do that? Apart from they can.
Yeah. So again, from an investment perspective, there's kind of there's different ownership rights. So again, as an investor in a story, you should always understand one. How do they own the mining rights? Do they option it, or do they actually own those mining rights? Two, there's surface rights. So again, in a lot of jurisdictions, the surface rights are separate from the mining rights. And so again, if you need access from the surface, you need to have acquired them. So they acquired surface rights over a large portion of what it was they're drilling. So that's very good news for them. And again, the other part too is again a lot of land, particularly in established camps, a lot of times has old royalties on them. So even though the company you're investing in may not have signed a royalty deal, there may be a legacy royalty, on those properties. So again, always, and those aren't things that companies like to put up in bright lights. So, always understand the sort of the ownership and any existing royalty structure on those properties going forward.
Yeah, we made a beautiful mistake years ago of not quite getting the access rights thing right. It cost us an extra $2 million. And I'm talking about a piece of land which was maybe 100 meters in width. That was an expensive learning. So yeah, it's a good one. Bad memories. So the other company we've kind of been looking at recently again, because I just want to sort of see what they're up to, because we looked at them about 6 months ago. It was Talon. Okay, yep. Talon. So they picked up this ex-Rio. They've got Rio as a partner there. And we kind of stepped away a bit because we weren't quite sure how they would move that forward. And I don't necessarily want to talk about Talon per se, but the relationships between a small junior who buys and picks up an one of the majors' assets to try and either kind of go back in because it used to be a formerly producing mine, or just the big major hasn't got around to doing anything with it. I mean, how do those relationships actually work, and what are the restrictions? Because I'm thinking at some point down the line, in this case, if Talon wants to sell, they've got Rio sitting there. So if Rio's also sitting there, they've got to agree to sell, presumably at the same time, under the same terms, or Rio steps in and picks it up. But they've already had it. So it suggests that they've looked at it. They're not really sure of what it is, or if they want it in the future. I mean, how do those relationships work? You've been in a
this
few.
Is something again is as nickel is coming back into favor, you're going to start to see these deals happen. We saw this back in the early 2000s when nickel started to move higher. You saw a bunch of companies take some of their non-core properties and sell them to juniors to advance them because the junior market was able to raise equity to do the exploration. The majors couldn't or didn't want to or couldn't do on those particular properties. So in terms of the different structures, it's important to really understand sort of how it's owned. Is there any back-end rights? And then 3, what the offtake rights are for the property. Again, particularly stuff that's around an existing producer. Those offtake things are difficult. So one is make sure how much do they actually own, and do they own it outright, or do they still have a series of payments they have to make to sustain that ownership interest. The second piece is his back-end rights. Again, a lot of the time it's you own 80% of it, but if we just pay you 1 times your costs or 2 times your costs that you expended, we can buy back into 50% or even more of the project. So so the exploration company gets some upside, but you're going to give away a lot of the upside off the back of that that company's work. And then thirdly, and this is the thing that's is really tricky. At Inco, when we sold off a bunch of properties to FNX, those properties came with some pretty onerous offtake terms. So again, yes, you could mine it, but a big portion of any cash flows that were generated ended up going back to Inco because they had very expensive processing terms that were part of the transaction. So in Talon's case, it's good. It's not. I don't believe there's any offtake rights because Rio Tinto doesn't have any nickel processing capacity. I think they own a big chunk of it. So I haven't looked at it in detail, but those kind of things that I just outlined are the kind of things that you should make sure any sort of property that's been picked up from somebody that you make sure that's there. And again, we're at the point now where there was properties that may have been sold off in the early 2000s that went through a cycle, have sat for a while, and then somebody else new has picked them up. Again, a lot of those offtake rights and so forth survive a change in ownership or something like that. So, and again, those aren't the things that companies put up in lights. So, again, from the talking about surface rights, and talking about these types of transactions, you just always make sure you check the pedigree of the property that you're looking at.
Yeah, I think it's interesting. There's definitely been cases where new management team comes in. They don't quite understand the extent of what it is that they need to do or how they need to perform or the level at which they need to perform to be able to be economic enough to actually make any money, because they usually end up working for someone else, and it's not always the shareholder, which is the unfortunate bit. So no, words well heeded. I'm out of time with you because I know you. How many more interviews are you doing today? What conversations are you having today?
Oh, I think I have 7 or 8 today, because again, we're on it's a European conference. So the day ends there at noon or 1. So yeah, as soon as I get off here, I'm back to back until it was 6 o'clock.
Oh boy. Good luck with that. I know it's really tough. Good luck this week. You seeing different types of people interested in your story?
Oh, there's a much, again, as nickel picks up steam, there's a sort of a much broader base of investors, and again, it's more good investors coming into the story. So it's good. Those are the good meetings I like doing. The ones that you realize 30 seconds in and they're just there to sell you something are less interest.
Less interesting. Well, you've had a good year, Mark. Keep going to the end of the year. I'll speak to you next week.
Sounds good, sir.